Hello everyone, and thank you for tuning in to Exness's weekly market outlook. Here we're talking about the key things to be aware of in markets this week and the narratives driving possible movements across a variety of instruments in this case. So joining us today to give us his insights is Stanislav Bernichov. Thank you very much, Stan, for being here.
Hello everyone, thank you Michael for having me today.
And the key, not necessarily panic, but the key point of consternation or trouble for traders so far this week has been declining cryptocurrencies and to some extent declining shares last week. The focus definitely stays on inflation and on the outlook for the Federal Reserve next week. So what do you think are some of the key possible ideas of what to do or not to do over the next few days?
Yeah. Sure, we had very red day yesterday across the markets. We have 4% for Nasdaq, 4% down, really big day down. S&P 500 minus 3% and Bitcoin minus 10% at the bottom. So of course, when that happens, that creates a big engagement among traders. They want to do something with that, either sell at the low or maybe to buy because the price is too low. So what I want to avoid really this week, I want to avoid picking bottoms because that's very difficult to do. Generally avoid making trades with anything against USD, for example, or any currency pairs with USD or anything quoted against USD. So, because it would be too difficult to find a good trade location.
And the key narrative, or one of the key narratives at the moment, is inflation. And we're expecting on Wednesday the release of American CPI. So can you give us a little bit more background on the expectations for that and the significance of recent releases as well for markets?
Yeah, so we see that inflation is peaking. So actually, if we take a look at the long-term picture, we see that actually it had peaked significantly, the same level of inflation we've seen only in the 80s. So it's going up, and we have the scheduled publication of Consumer Price Index this Wednesday. So it's very important to release this time because inflation is really in focus of traders. And in case it will show another uptick, we may potentially have another round of selling for equities, for equity indices, for maybe crypto, so I will be very aware of that. As for guidelines, I will expect the mildly bearish scenario for Bitcoin. Probably it would consolidate. In case we won't have any bad news, really bad news, probably it will consolidate. So I will avoid trying to sell it at the bottom or buy it at the bottom. So probably I might make some short-term trades later at the end of this week or maybe in the beginning of next week. Speaking of gold, it also stands on the support, but before it takes off, actually it may show some volatility or some rotation here. Crude oil is also in the distribution phase, which is a range-bound market. As I've mentioned, yen was not moving, and that's why I will try probably to build some positions on the pairs with yen.
All right, so thank you very much, Stan, for joining us and for giving us your insights. In summary, we have the possible range-bound scenario for Bitcoin and for oil, while gold possibly is going to make gains. One of the strong ideas possibly for this week is pound yen a buy, and the key factor that's in focus for most traders this week is American inflation, given how high that's reached and the possibilities of a change from the expectations in inflation. And also for most traders, it seems to make sense to avoid where possible pairs or instruments with the US dollar and instead to focus on miners or cross pairs as used to be known. So thanks very much, Stan, for joining us and giving us your valuable insights.
Thank you, Michael. Have a good trading week, everyone.